But let me try to summarize what happened in 5 points if it's possible. First, Lehman Brothers and creation of a new asset. Lehman Brothers, like any other financial institutions, created and traded complex financial assets tied to the housing market. These assets, such as mortgage-backed securities and collateralized debt obligations, were created by packaging individual mortgages into investment products. And of course, they needed funding to make this work. And this will lead us to the second point, which is borrowing and funding. Lehman Brothers funded its operation by borrowing money from other banks and investors. This borrowing allowed them to invest in subprime securities, which included mortgages from borrowers with lower credit standing. And this will lead us to the third point, risk subprime securities. The subprime securities the Lehman Brothers invested in were indeed, as the name suggests, risky. These securities were backed by mortgages from borrowers who had higher default risks, often referred to as subprime borrowers. These borrowers had lower credit scores, histories of missing payments, or even limited credit histories. 4. Withdrawal of funds. When the subprime borrowers began defaulting on their mortgages payments, the value of the subprime securities held by Lehman Brothers declined significantly. And as the risk became obvious, other investors and even banks, they start to lose confidence in Lehman Brothers. So they start to withdraw their money. And this will lead to triggering the crisis. The mass withdrawal of funds from Lehman Brothers created a severe liquidity crisis for the bank. With limited cash on hand, Lehman Brothers was unable to meet its financial obligations. As a result, on September 15, 2008, Lehman Brothers filed for bankruptcy, making one of the largest bankruptcy in the history, which of course led to recession has not even seen since the Great Depression.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it. It's so horrible.
Broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
The crisis awakens people to that sense that the game is rigged. This economy is not working for me.
Well, behind the scenes, there was a mysterious person or a group of people working on a new invention. They sent an email to a cryptography mailing list, and the Bitcoin code was shared. It was signed under the name of Satoshi Nakamoto. And the vision is simple, is to create a crypto digital currency that no one can control, not even government, and can be transacted at any moment and anywhere in the world. In the beginning, no one believed this new invention that called Bitcoin, just because it is way too difficult to solve the double spending problem in a decentralized manner. You see here, even banks, they have everything in a centralized manner, everything under their control to solve the double spending problem. But Bitcoin solved this problem in a decentralized manner by a decentralized network of miners who validate and secure the transactions. Through the process of mining, transactions are confirmed and added to the blockchain, creating an immutable and time-stamped record that prevents the same funds from being spent more than once, ensuring the integrity of the system. And here is an interesting question. Can we confirm this? Can we see the codes and verify that the double spending problem is solved? Well, the answer is yes, because Bitcoin is built on an open source code, was released in 2009 by an anonymous person or a group of people while using the name Satoshi Nakamoto. The code of Bitcoin was available to the public under an open source license. One is the decentralization, where Bitcoin operates on a decentralized network, meaning it is not controlled by any single authority or institution. No financial institution on earth can match the level of a decentralization of Bitcoin. Second, trustless transactions. Bitcoin eliminates the third parties, such as banks, enabling secure transactions between a wallet and another, or between a person or another. Third, scarcity or limited supply. Bitcoin has a limited supply of 21 million coins, regardless that there was a lot of reports of missing coins and they cannot be reached anymore. This limitation, this scarcity, make Bitcoin out of banks' manipulation, basically. Fourth, immutable and transparent ledger. Financial institutions typically rely on centralized databases that are more susceptible to manipulation. Bitcoins enables fast and borderless transactions, removing the barriers that imposed by traditional financial system, such as cross-border fees, exchange rates, and time delay, and all this kind of bullshit. Sixth, which is the most important thing, which maybe you will not find it anywhere else, is user control. User will be able to control their funds finally. This self-custody concept, which in contrast to traditional financial institutions or banks,